Welcome to the MUFG Global Markets Podcast. I'm John Cook, and I'm joined today by Takahiro Sekido, Chief Japan Strategist for MUFG. It's Tuesday, October 26, 2021. Welcome back to the podcast, Sekido-san.
Good to be back.
Always good to have you. So it is a busy week in Japan. Not only is there a BoJ policy meeting, but also the highly anticipated lower house elections. Why don't we start the podcast off by previewing both events for our listeners?
Okay. Elections were held for upper house seats in Shizuoka and Yamaguchi prefectures on October 21st. The LDP won one and lost one. So the ruling coalition lost one of the two seats that were up for election. The ruling parties also failed to make gains in a Tokyo Assembly election held in July. In the coming weekend, lower house elections, there is a risk that the LDP again does not do well as politics suggests. Prime Minister Kishida has said that the LDP is aiming to maintain its 233 seats in the election. If the ruling parties suffer a large loss, the LDP and the Komeito party may have to form an alliance with another opposition party. That might change the assumptions underlying our yen rates and yen basis outlooks. The Bank of Japan, the BoJ, will meet on October 27th to 28th, and we expect it to keep monetary policy unchanged. We expect the Monetary Policy Board to split its time addressing first the Outlook Report, corporate and household sector conditions amid rising prices resulting from a weakening yen and the resource prices climb. And secondly, a checkup of the financial system, especially restructuring the regional banking sector.
Okay, so sounds like the ruling coalition is to some extent at risk, and if they perform more poorly than expected, you might have to kind of change your outlook a little bit. So that certainly sounds like something to be, for our listeners to be watching. BoJ meeting perhaps a little bit less so, although I think again, as you point out, the restructuring of the regional banking sector is key. So keep an eye out for that.
Yeah.
So switching topics, you've put out a number of interesting publications as of late on some of the monthly data releases. One in particular caught my attention, entitled Japanese Actively Expanding Portfolios with Both Non-Yen and Yen Bonds in a JGB Redemption Month. I was just wondering if you could take our listeners through some of the high points of the publication.
Okay. Japanese Securities Dealers Association, JSDA, data for September, released on October 20th, showed net buying of total JGBs by 20.9 trillion yen by overseas investors. Overseas investors net bought TDBs by 20.5 trillion yen, medium-term JGBs by 534 billion yen, and super long JGBs by 479 billion yen, while net selling long-term JGBs by 680 billion yen. Then Japanese pension funds bought 956 billion yen of JGBs and 813 billion yen of overseas assets in September. They increased their holdings of TDBs by 1.4 trillion yen, super long JGBs by 268 billion yen, and long-term JGBs by 295 billion yen. Pension funds bought more yen bonds, while slowing the pace by 2.3 trillion yen year over year. Lifers continue to increase their net buying of super long JGBs by 777 billion yen in September. Lifers continue to manage durations, especially for super long-term JGBs, but remained paused with buying overseas alternative investments for EU.
Yeah, so plenty of demand for long dated and just JGB fixed income in general there.
Yeah.
Let's continue here. So we talked about the JSDA data. What about the Japanese Ministry of Finance's balance of payment data and the U.S. Treasury's TIC data? What does that tell us? Or together apart, but what does that tell us about Japanese investor activity in foreign bond markets?
Okay. The U.S. Treasury Department's International Capital TIC data for August, released on October 18th, showed that Japanese investors were net buyer across the board of U.S. Treasuries by $7.3 billion, U.S. agency MBS by $2.4 billion, and U.S. corporate bonds by $910 million. In August, Japanese expanded their holdings of U.S. Treasuries. Japanese balance of payment (BOP) data shows that Japanese investors appear to have expanded their U.S. assets through investment funds, and also may have shifted from U.S. stocks to U.S. bonds as they reshuffle their U.S. assets through the investment fund. In August, pension funds, trust banks, net acquired 320 billion yen of stocks and investment fund holdings and 14.1 billion yen of medium to long-term foreign bonds, possibly adjusting the weightings of their assets. Over the near term, we expect dollar-yen upside to be limited amid the yen weakening by, firstly, Japanese exporters, real demand falls, and secondly, pension funds adjusting their asset weightings. We also expect, thirdly, foreigners building their JGB positions as dollar-yen forward expands to impact. Fourth, falling bond hedging costs, dollar-yen forwards for Japanese investors. All these factors will bear watching, not only as catalysts for JGBs and yen basis, but also for dollar-yen spot rates.
And we've seen a pretty, I think we've talked about it before on the podcast. We've seen a decent widening in basis. To your point, I thought it was interesting in both the MOF and TIC data. You saw, the MOF data, as you point out, suggested that Japanese investors were sellers of U.S. bonds, whereas the TIC data suggested that they were kind of buyers across the board. So you make the point that, that some of those purchases might have been through investment funds, and also that some of those purchases in late August might not have been captured in the data. So again, I'd encourage our listeners to check out your report for a little bit more information there. But I think, we're kind of running out of time here. So why don't we wrap things up as we typically do with your outlook on yen rate, spot dollar yen, and yen basis.
Tokyo markets are now awaiting the results of the October 31st lower house election. Over the near term, dollar and yen will continue to move in tandem. Investors have been pricing at the start of monetary tapering in the US in November. But it is hard to see market sentiment growing more hawkish about the Fed's policy stance. Out of the November FOMC meeting, we expect dollar to maintain a neutral bias and take a trade in a 2.5 yen range, 113.50 to 116. The yen rate curve has continued to rise slightly. Campaigning for the lower house elections began on October 19th, and major parties have been actively out, with party leaders debating. Market speculation about expanded fiscal spending will clearly persist, but seems to have paused amid the stress of upcoming news. Yen swap rates will likely lose their upward bias and return to a neutral bias. The yen basis curve has widened, but the front end has tightened slightly. The Ministry of Finance weekly data for October 10th to 16th shows that Japanese investors net bought 1.2 trillion yen of overseas securities, while overseas investors net bought 2.4 trillion yen. Japanese investors net bought 1.2 trillion yen of medium to long-term foreign bonds and 64 billion yen of stocks and investment fund holdings. Foreign investors continue to net buy stocks and investment fund holdings by 960 billion yen and short-term yen bonds by 828 billion yen, and also turn net buyer of medium to long-term yen bonds by 623 billion yen. Overseas investors' appetite for Japanese securities has grown so far in October, amid a strong buying of overseas securities by Japanese investors. However, the dollar-yen basis response shows that the front end of the yen basis curve has been dominated by overseas investors arbitrage trading JGBs, while the belly and long end have been impacted mostly by Japanese, with yen basis for dollar asset funding for overseas investing. Yen basis has been widening, while yen basis could widen further over the near term. We think the recent trend will slow slightly, and yen basis could once again take on a neutral bias rather than widening bias.
Great. So that's pretty interesting. So some different responses across the basis curve, which is I guess sort of speaks to where people play. Overseas investors tend to invest in short-dated JGBs, so that's something that's going to constrain the widening there. Whereas Japanese company FDI tends to be a little bit more medium to long term. So thanks for taking us through that. And as a note for our listeners, I do believe that we're likely to do a podcast on Japanese lifer second half of the fiscal year investment plans, perhaps as early as next week. Not to put any pressure on you, Sekido-san, but look for a publication on that from Sekido-san, and I'm sort of shorting you a podcast there, so hopefully we can do that. So again, great stuff as always, Sekido-san, and we'll talk to you next week.
Okay, thank you so much for having me, Jan, always.
Thank you for listening to the MUFG Global Markets Podcast. Rate, review, and subscribe on Apple, Spotify, or wherever you get your podcasts. And reach out to your MUFG sales rep for any further information. Check back soon for more insights from the Global Markets Research Team.